Brad Williams. Frugal Finance, we talk about your rights when paying your mortgage. This is from the Federal Trade Commission on their recommendations about mortgages. We're going to cover what is a mortgage servicer, how to avoid and fix problems with your servicer, missing mortgage payments, default and foreclosures. For those of you just seeing my first video from Frugal Finance, I used to own a mortgage company. So I'm just going to interject a lot of my experiences. Question is, what is a mortgage servicer? Well, I was a mortgage broker. What I would do is I would put together a loan, purchase or refinance, a second home improvements, lot purchase, mobile homes, commercial properties, the whole kit and caboodle. I did it for a long time. But here we're just talking about residential. And what happens is I would package the deal. I did a lot of work with Countrywide, who no longer exists because of their practices. What they would do is they'd package up my deal. Then they would sell off the loan. They would service that loan. They would get a service fee for taking care of all of the paperwork, the receipts. In other words, it's a huge accounts receivable on the part of the lender. You promise to pay them back. All that money has to be directed. Well, some of it is going pay off your mortgage. And then part of that loan, that rate that you paid is going to be sliced up in small pieces. So what happens is, in this way, Countrywide most likely packaged the deal, repackaged the deal, and then they sold off the servicing rights. And that could be any number of groups. Countrywide did have a huge in-house portfolio. In other words, they retained a bunch of loans, billions and billions of loans, and they kept the loans, but then they sold off the servicing. What's the typical servicing? It's about 0.3%. It could go up to 5/8, depending on, there's just too many circumstances. Unless you're an expert in the mortgage arena, we'll just leave it at 3/8. Well, that 3/8 is being paid to whoever's servicing your loan. And my experiences prior to starting my mortgage company, I worked for the largest savings and loan company in the nation at the time, which subsequently went upside down. You see the theme here? The mortgage industry, even at the highest level, can sometimes be a tough racket. The largest savings and loan at the time was in Central California, and they had a lot of operations down in Los Angeles. So I would fly down to Los Angeles and take care of things. One of the visits, or many of the visits, was in a warehouse type setting where there was probably 600 bullpen type setups, maybe not that many, but hundreds of tiny cubicles where people were working, and they were mortgage service employees for this savings and loan. And that's all they did, is they dealt with all of the nuances of managing loans. So that's what the mortgage servicer does. They keep track of the interests, the principal, the taxes, the insurances, the whole kit and caboodle. And the majority of your monthly payment is going to go to whoever owns the loan. But again, whoever owns that loan sells off part of it. So a servicer can take care of all of the day-to-day management of your payments. Now, in the past, until the government stepped in and said, look, we need you guys, the mortgage servicers, need to get your act together, because it was chaos. There was no rhyme or reason. The servicing rights were being bought left and right and leaving you in the dark. So sometimes you could see 3 to 4 servicers over an 18-month period, making it really a challenge. If you had a question, who are you going to call? And you're not going to call Ghostbusters. You have to weed through all this and backtrack all of your documents. Now it's online, and it may be a little bit more helpful, but when you run into a problem, you need to know who your servicer is. If there's an issue about loan balances and payment history, or how about insurance and taxes, you need to make sure, if you have an impound account, that that information is being transferred before the deadline on both insurance and property taxes. You won't know that until it's late, and guess who's going to be subject to a possible late penalty? Before you sign your loan documentation, make sure who is liable in the event if there's an impound account and there's a late payment, who's responsible if it's late? There's a penalty. Or property taxes. There's a huge penalty if property taxes are late. That's something you need to keep in mind. I know it's not something you're going to think about until the problem comes up. But if you address this before signing your loan docs, even if you're refinancing, because they're most likely you're going to have a new servicer, so you want to know how that works. You want to know who they are. Make sure you have a phone number and email, and just due diligence. How to avoid and fix problems with your servicer. Typically, the servicer must credit a payment to your account the day they get it. That way, you don't owe extra fees and payment, and the payment doesn't look late to the lender. Again, another issue. Today, not so much so. In the past, you would literally have a coupon. You would tear out a coupon. You have a coupon book. And you had a traditional check and you would send it to the lender. Well, because there could be delays in the mail and it shows up late, there could be an argument as to who's responsible for a possible late payment. You could see that in most cases, and this was the problem back then, that you're literally held you're held over the fire. And again, just like insurance companies, these mortgage companies are going to do the same thing. Due diligence, all I can say. Review and keep your records. Review all letters, emails, and statements when you get them from your mortgage servicer. Check that the records match yours. Most servicers, except very small ones, must give you either a coupon book, often every year, or a statement every billing cycle, every month. Servicers must send periodic statements to all borrowers who have adjustable rate mortgages, even if they decide to send them coupon books. Your coupon book or statement will have your servicer's contact information. That way, you can learn more about your account, get an explanation of a charge, or confirm that they're crediting your payments properly and on time. Even if you don't have any problems with the servicer, keep your mortgage statements, coupon books, records of your payments, for instance, canceled checks, bank statements, and online account history, and every document you send to the servicer. If you have a problem down the road, you want these records to confirm your payment history and any communications with the servicer. Track down late statements. If your statement is late, even by just a few days, call the mortgage company to track it down in case there's a problem with your accounts. If your account shows that you're paying late, you could be in default on your loan. Late payments and a default are reported to a credit bureau and will appear on your credit report. That can affect your ability to get credit in the future. Get an explanation for anything you don't understand. Confirm new servicer's name and address before your next payment. If you get a notice that your servicer has changed, and don't be surprised, call your current servicers, confirm the new mortgage servicer before you send your next payment. In the world of scams, now know you have to take those extra steps. Call your mortgage servicer and don't rely on the number of whoever sent you documentation that says your servicer is changing. Go back to your original mortgage service document and verify and call that particular number. This will make sure your payment goes to the right servicer, avoid delays in processing, and can help you avoid a scam. Confirm your loan balance and account information. If you're looking to refinance or pay off your loan balance before the end of the loan term, you'll need to confirm the payoff amount with the servicer. Payoff amount is what you still owe on your loan. Not the same as your current loan balance because the payoff includes the interest accrued up through the day you expect to pay off the loan and any fees you haven't yet paid. Call your servicers to get your payoff amount. Well, you pay a lot of money to an escrow company, at least in California. I can't speak for any other states, but the escrow company dials into this and you can ask the escrow company. No, in some cases, you're going to close through a lawyer. Somebody has to get this payoff amount. I've never had any luck getting this payoff amount. It's because you have to go through this verification process, so on and so forth. And so from a mortgage lender's point of view, I didn't have direct access. The escrow companies have some in, and I never really delved into how they get that information. But you, as the borrower, have access to the verification process. So feel free to check that out if you need to. Before you decide to pay off your mortgage, consider these questions. Will you owe a prepayment penalty? I'll have videos on this. Oh, I can't tell you how many times I'm refinancing a borrower. They don't find out to the last minute that there's a prepayment penalty. Yeeks. Yeah. as I've stated over and over and over, the industry has a way to word things or not word things. Now, prepayment penalty is something the shady lenders out there avoid mentioning. It's sad because a prepayment penalty will bust the loan. In other words, all that work you've done, all the work I've done, just goes to waste because they either forgot, didn't pay attention, wasn't brought to their attention, or for whatever reason, a prepayment penalty, it could be 2% of the loan amount. That's a lot of money. The top 10 questions you're going to ask when you're doing a loan is there a prepayment penalty in any way, shape, or form? In other words, the question you ask is, if I refinance this, other than paying off the loan, is there a prepayment penalty or any other surprises that I might run into? And say a prepayment penalty. Not only will it upset you, but they will open your eyes to the next time you do a loan as to how to go about the loan process. Now, here's the deal. If you are a AAA borrower and the lender offers you a prepayment penalty and lowers the rate by 0.3%, what are you going to do? How many people I spoke to and yeah, I got a great deal. They lowered the overall rate by 0.25% or 0.3%, but it's a 5-year prepayment penalty. And you're 4 years into the deal. Well, you bite the bullet, you wait a year. There's no reason to, well, okay, I have to back up. If interest rates drop significantly in a refinance position, 2% below your current rate, does it make sense to refinance that? Absolutely. Bite the bullet. It's a prorated amount based on the duration of your existing loan. So if you're 4 and it's a 5-year prepay, it's not going to cost you everything. It's not going to be 2%. Well, again, you have to check the wording. When you're doing this and you're thinking about prepayment, say, what are the conditions of a prepayment penalty? And is it reduced over time? Okay, do you owe other money? It may make more sense to pay off other loans, credit cards and car loans first if you're paying a higher interest rate on them, all right? What's your situation? Well, here's another case. Do you owe other money? Well, a lot of people, in terms of paying off the existing loan, you're generally, and this is what happens, if you're in a 5% mortgage environment and you have credit cards, car payments, and perhaps student loans, and you have a lot of equity in your property, foolishly or not, because there's a cost. There's a cost to doing this. As you consolidate all of this, you take out you do a cash out refinance, and you pay these off. So now you're just stuck with a higher mortgage payment and you have some relief from these high interest related loans. I'm not saying good, bad, or indifferent. I refinanced hundreds and hundreds of loans that they were cash out to consolidate all this stuff. The same people call me back 4 years later and doing it again, and then calling me back 2 years later and doing it again. What's your situation? Decide whether it works in your favor to pay the loan early. Do you plan to stay in your home for the long term? Are you nearing retirement? Will there be tax implications to paying off your mortgage? Well, those are questions that I'm not going to address here, but kind of get to where we're going. Now, raise and resolve disputes or errors. Now, again, this right here, I'm not sure how it has anything to do with the servicer. This is just you owning a mortgage, and the impact of whether you refinance or what have you has really nothing to do with your servicer. Understanding your loan is more important than the servicer. But if you can't remember your particulars about a loan, and here's the deal. I could ask, I'd say 99% of the time, you ask an individual who's refinancing, what was your interest rate? I don't remember. Yeah, I mean, who's going to remember? Not many. It's the second loan that you have that you don't remember. It's that first you go, yeah, it's 5%. Well, what about your second? I don't know, maybe 10%, maybe what? So kind of keep track. Raise and resolve disputes or errors. There's always errors, always disputes. And that's just part of it's part of the responsibility you have when you have a mortgage. If the servicer made a mistake or charged you a fee you don't owe, correct it as soon as possible. But keep making your regular monthly mortgage payment. I know if there's an argument, if there's a dispute, if you say this mortgager is not worth a hoot, I'm not going to pay them. Well, guess what? That burden rests on you. Always make your mortgage payment. Don't subtract the disputed amount from your mortgage payments. Some servicers will refuse to accept what they consider a partial payment. They could return your check and charge you a late fee or claim that your mortgage is in default and start foreclosure proceedings. Yeah. Yep, read the fine print. This is the stuff that no one will ever tell you about. Don't write your dispute on your payment coupon or a copy of your monthly mortgage statement. Instead, contact your servicer in writing and explain the problem, known as a qualified written request. Use the sample complaint letter here. Just click this link to write your request, including your account number and an explanation of why you think your account is incorrect. Gather any documents that support your request. Your record should include copies of your statements, coupon book, and paperwork showing that you made your payments, for instance, canceled checks, bank account statements, online account histories, and other letters to the servicer. This can serve as a proof of your payment history and your interactions with the servicer. Now, here's another deal. This is probably a dated document. Let's take a look here. This was August 2022. Some of this stuff is a little bit legacy with the advent of you can just do auto pays online. Solves a lot of these issues. Now, keep in mind what lenders will do is they'll offer you a bit of a sweetener if you do auto pay. I don't know, maybe 1/8%. Question you need to ask is when their servers are hacked, who's responsible? Who's responsible for that breach? And when there's an error, who's going to fix it? The questions that you're going to ask. And how about your information? Well, by now, I suspect the hackers have every social security number and every identifiable information on every person in the world, given how seemingly easy it is to hack into even the most sophisticated software, servers, or what have you. But with that being said, these are just some things you need to think about when it happens. You can only put up so many guardrails. That's just the risk of doing business these days. Unless you own your house free and clear, these are the burdens of the mortgage and, for that matter, pretty much everything online. Know your rights under the law. Okay, under the Real Estate Settlement Procedures Act, and this is pretty strict. As a mortgage broker, I had to follow this to the T. I mean, ad nauseum. And it's good because you, as the consumer, have to have some protection. And as I've mentioned in other videos, the latest thing, relatively latest thing from Wall Street, it's called private credit. And it's going to be, right now it's aimed at corporate transactions where Wall Street's just coming up, shoot from the hip and just making up these private loans. Huge. But because the biggest names in Wall Street are entering this new product, expect this to trickle down to you, the consumer, and you're going to get taken. You're going to get taken by Wall Street. They just take people left and right. And ultimately, it's your responsibility because you signed whatever document they have. There'll be non-conforming deals, which is scary. That means they don't have to follow the Real Estate Settlement Procedures Act. And trust me, Wall Street's going to jump on this as the hottest thing in the world. And as soon as it catches on, the consumer, beware, because this is going to be a nightmare situation. It's going to copy the same format as the 2007, 2008 meltdown. And it's just the same repeated pattern. And the unknowing consumer is going to get taken to the cleaners once again. And what's the end result there? People are going to lose their houses and the same foreclosure process. It's just, rinse, wash, repeat. I don't know. It's just Wall Street. That's just what Wall Street does. Now, in regards to grace periods and what have you, all right, let's get back to this qualified written request. Okay, under the Real Estate Settlement Procedures Act, your servicer must acknowledge your letter in writing within 5 business days of getting it. Correct your count and determine instead that there is no error. Generally within 30 business days, send you a written notice of the action it took and why, the name and phone number of someone to contact for more information or help. You have a 60-day grace period after a transfer to a new servicer. That means you can't be charged a late fee if you send your on-time mortgage payment to the old servicer by mistake, and your new servicer can't report that payment as late to a credit bureau. But you didn't know that. Now you do. Missing mortgage payments, defaults, and foreclosures. Nasty business. Usually, if you miss one or more payments on your mortgage loan, your loan is considered to be in default. But you might have special rights related to the COVID-19 pandemic. Well, we can put a big X here because that forgiveness was rendered moot. I think it was October of 2024. In other circumstances, the servicer might order default-related services to protect the value of the property, like inspections, lawn mowing. Yeah, this is the second error I've seen. I don't think they're moving lawns, but they're going to be lawn mowing, landscaping, and repairs. The servicer will charge your loan account for these services, which can add up to hundreds of thousands of dollars. Out of your hands. Isn't that amazing? If the lender decides to move ahead with foreclosure, that process can also add hundreds or thousands of dollars in additional costs to your loan. That can make it even more difficult for you to keep up with payments, make your back payments, and keep your home. If you're facing foreclosure, stay in touch with your servicer and try to work out a plan. Pay back the payments you owe, modify the loan, enter into a repayment plan, or get a temporary reduction or suspension of payment. If your loan was in default when your new servicer took over, they might be considered a debt collector and you may have additional rights. More to come regarding the foreclosure, but those are your rights, okay? Use them. If you want to link to any of this information, it'll be listed below. And if I see something pertinent, look up the right side of this video, and there may be a link up there at some point in time. YouTube generally will show something. This pretty much explains what a servicer does. They're the babysitters. Again, no, it's boring as heck, but when you read that note and deed of trust and promissory and all the other cumbersome documents, take a look at the mortgage servicer terms and conditions, all right? So you have a full understanding along with anything else. Leave comments. Tell me the nightmares you faced. I kind of compare it to the healthcare industry and the challenges you face there. Well, the mortgage industry isn't much different. They're working with trillions and trillions of dollars of debt. Healthcare industry is working with trillions and trillions of dollars of debt. And you can see that it's just time consuming on everyone's part here. So the bottom line here is make your mortgage payments on time and be certain to check your impound accounts. I know it's not something you even consider, but try to make a note as to when the mortgage payments are due. And I bet you probably don't know that because at least in California, it's twice a year. Well, at least in the county I'm in, it's twice a year. And there's a payment date and then there's a due date, and it could be a 3-month window. And that due date, if it's past that due date, there's a huge penalty. So just keep track of that and make sure your statements reflect when that payment's made. Brad Williams, Frugal Finance. Thanks for watching. See you soon. Oh, yeah. You know that little subscribe thing that flashes occasionally? Help me out. Hit the like button. Subscribe for all the wonderful information I'm going to pass on to you.